Good morning, good morning, good morning, everybody. As everybody filters in, I'd like to welcome you all to the overnight price action for April 28th, 2023. Man, this year getting on up out of here. The month of April is over. This is the last trading date. Let me check my calendar. I ain't gonna lie to you. Yes, this is the last trading day of April. Man, January, February, March, the first quarter gone. Now, the first month of the second quarter gone. Man, this year getting out of here. It's getting out of here. Who in the chat this morning? Here to learn and share. Good morning to you. The birds are chirping. Hey Siri, what's the temperature right now?
It's currently 66 degrees.
It is a beautiful 66 degrees in Columbus, GA. What's going on, Pamela? What's going on? Here to learn and share. Be sitting there like this right here. Notification. What's up, Laverne? Hold up. I have never seen somebody's mother. I have never seen Laugh Not Cry Later. I remember the interesting names. Somebody's mother. I have somebody's mother. I've never seen you somebody's mother. Oh, SJ, if you don't stop changing the names, What's happening, Audrey? What's going on, Trader Moo? What's happening, TK? What's up, man? Hold up. I ain't gonna try to say that. I see the handsome Batman and the lovely Wonder Woman in the back, but I'm not gonna try to say that. I'm gonna say it. Mighty Zeron. I'm saying Matey Zeron. That's what I'm gonna say. Matey Zeron. I know I tore it up, but that's what I'm gonna say. Good morning to everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in, oh, hold on. Did I get it right? Did I get it right? When the sun's out, you gotta bring the guns out. Hey, hold up. I'm in love. First time mom and everything. SJ, you done pop the baby out. SJ, why you ain't tell us you was gonna SJ, we didn't know you was about to. You should have said something. Man, SJ. SJ, you in the Discord, right? You in the Discord, right? I think you in the Discord. SJ. Okay. Hold up. SJ, do me a favor, SJ. SJ, do me a favor. Click on that link right there and then come and come into the private chat over here. All right. Shay in Discord. I just put something in the private chat. Click on that link and look in the private chat. Or is it easier for you to check the Discord? I'll do it like that. You said Shay on Discord. Y'all know Discord be giving me a headache. See, I don't be knowing how to. Hold on. See, Discord gonna drive me crazy. And y'all know I can't. Okay, all right. All right, SJ, I just sent you a message on Discord. I'm gonna leave that over there. So if you respond, I don't know if you can respond while you on a. Oh, you right there.
Good morning.
Good morning. I'm over there. Hey, yeah, you in the private? Did you see the private chat over there to the side right there?
I don't see that private show. It says you're on show. Everyone can hear you.
Okay, but do you see the chat? Like, do you see what I typed in the chat? It should just be one thing in there.
See the chat. Let's see. This is my first time ever pulling up on here, so
I don't know how to look on the phone because like you'll see like it should be like a private chat and a regular chat. Do you see a chat which is one thing in there?
Let me see. I click on chat and it says chat with everyone in the studio. Let me send a text message. I thought I saw something.
Yeah, that's it. That's it right there. Do you see something else in there? I just saw test.
No, nothing else in there.
Okay,
Comments.
it might have been before you got it. Okay, hold on. All right. You see that pop in?
Oh yes, but no, you don't have to.
I didn't say that. Just put it in there. Just put it right there.
Oh,
yeah, just put it right there. That chat right there. Shut up.
You don't have to do this.
Put it in there. Congratulations. Why you didn't tell us when you about to? Why you tell us you about? You
I guess because this is like
that?
my second one. So my first one, I told everybody my first one, and then I lost them at like maybe 14 weeks. I was like, you know what? This time I said I was going to wait till 24 weeks, and then 24 weeks just said I'm just going to wait till I deliver. So if you saw me, you saw me. If you didn't, if you saw me, you knew. But if you didn't, then it was like, oh, okay.
Hold on. You said you lost him.
My first one I did a few years ago.
Oh my goodness! I'm sorry to hear that.
I had a miscarriage. Thank you. I had
a
miscarriage.
I understand. So, like not wanting
nervous.
to. Yeah. I understand that.
Even though I made it out that first trimester, I was like, okay. Right at the first trimester, I announced, and then I lost him like a week. So then I said, you know what? Next time we're gonna wait. So it was kind of like hush hush.
Is that an L or an I?
That is an I, Miss Jackson. Okay. I am Miss Jackson.
Oh, I am okay. If you're nasty,
everybody always say that. They or either I'm sorry, Miss Jackson.
Yeah, I know.
So that's why I've been like all over the place the whole time. When I be like, "Oh, I'm gonna get it together," and I'm gonna pull up, I'm gonna ask questions.
Then, Shay.
I just be so distracted.
Okay, Shay. No, just seeing it.
I know I got 1,000 names, don't I? That's my middle name.
Man, that's what's up.
He's born March 30th, so 4 weeks.
Congratulations. Yeah.
Thank you.
Congratulations. I'm so happy. Look at God go bring a tear to my eye this morning.
Thank you.
All right. Go bring a tear to my eye this morning. How do I get back to the regular? Okay. Congratulations to SJ. Congratulations to somebody's mama.
Thank you. You really didn't have to do that.
Yeah.
I really appreciate it.
All right. You're very welcome. You're very welcome. And congratulations on your new baby.
Thank you.
New
Well, he's 4 weeks
baby.
now.
4 weeks?
Mm-hmm.
You been getting any sleep?
No. And the whole sleep when the baby sleep, I don't know how to do that either.
I didn't learn that either.
Yeah,
That's a myth. That's a myth. Sleep when the baby sleeps is a myth.
yeah.
Somebody
Exactly.
said I'm a whole granddad out here.
Yeah, I'm gonna have to learn to sleep when he sleep and prep things ahead of time. That's something I'm struggling with. So
Is his clock off? Is he like up? Like does he sleep during the day and up at night, or is
he
random?
sleep. It's random, but when he sleeps at night, he probably wakes up at least about maybe once or twice during the night.
Mm-hmm.
So he's in his own space, and I hope I keep it like that. Sometimes he'll come over and he'll sleep in the bed with us a little bit, but I'd rather him stay in his own space. I don't want to start that because I heard it's a disaster trying to get them out. So
Yeah, that's why from the beginning, it wasn't no sleeping with me at all. Nuh-uh. I get up, I'll feed you, make sure you're dry. I was a big advocate of self-soothing. You got hold on. What is that blasphemy you just showed? What's your hat say? That
Tennessee
does not
State.
say LSU, do it.
Oh no, Tennessee State University.
Oh, okay.
TSU.
I thought that said LSU. I don't like nothing that looked like a tiger. I don't like LSU Tiger. I don't like Clemson Tigers. I don't like Auburn Tigers. Nothing that looked like a tiger.
Mm-hmm.
Well, congratulations again.
Thank you again. It's a learning process. I'm excited, but I'm here for the task.
You will be successful at it.
Thank you so much for your generosity. I really do appreciate it.
You're very welcome.
Thank you.
And, all right, we're going to get to the show now. Thank you for pulling up.
Sorry.
We good because I got to separate the wheat from the tip. I got to, you know what I'm saying, the people that's coming in for just trying to mooch. Hey, they trying to mooch. Not they gone for real now. They only the real deal Holyfield left here now.
Okay, all good.
All right, then.
All right, have a good one. Thank you again.
You too. They what I was gonna say? Where I'm at. Shout out to everybody that pulled up, everybody that just tuning in. If you don't know what's going on, too bad. Catch up. Michelle Tucker, come pulling up 14 minutes late, making a grand entrance. What's up, Father Legends? What's going on? What's up, Lil Hulk? What's up, Rhonda Green? Divario. Who else? That's it. I think we said what's up to everybody. FC. I remember that face. I don't remember that name though. Somebody probably done changed the name on me again. Probably not. Yeah, man. Let's get to it. I stopped sharing my screen. I'm sorry, y'all. Oh, I didn't do my intro. Yeah, I did. I did do my intro. No, I didn't. Anyway, please like, comment, subscribe. Help us get 2,500. You're very welcome. I'm glad y'all got something out of it. He said the first spot game, baby. It is. That's the first spot game. It's the first spot game. I know. Well, I know it's the first one that during the, you know what I'm saying? First spot game, baby. You feel me? Hey, yes, we have a new Black Spider baby. I'm glad y'all got something out of the options class. A couple people reached out to me saying, hey, the class was fire. Y'all know I speak extemporaneously, so hopefully, last night after I got off live, I thought about it. I was like, man, I never talked about expiration dates. I didn't talk about expiration dates, so maybe one day in the future we'll revisit options again, and I'll make sure to talk about expiration dates because that's important. I didn't talk about that last night. I didn't have any notes. I didn't, you know what I'm saying? I was going off the dome. As y'all see, I was going off the dome, and I didn't talk about expiration dates. And that's very, very, very important when you talk about options. So we'll probably revisit options again one day in the future. I ain't even gonna say one day in the future. What's the date? The day Friday, next Thursday. Next Thursday, we did last night was Thursday. So next Thursday, we're gonna revisit options again, and I'm gonna make sure I cover expiration dates. I'm gonna go back and watch the video from last night, and then anything that I feel like I left out or should have said, then I'll come a little more prepared next Thursday and cover it. If I feel like, oh, I did a good job, we'll just kind of skim through it, do a quick recap, and then I'll focus more on expiration dates and stuff like that. So we'll do that next Thursday. Next Thursday. If I forget, somebody remind me next Thursday. That's what I said. Buenos dias, Valdez. Buenos dias. All right, let's get to it, man. Let's get to it. Let's talk about the overnight price action. You're welcome. You're welcome. You're welcome, Power Moves. You're welcome. You're welcome. You're welcome, Power Moves. Shout out to Black Spiders. If you do not know, last night I shared my chartification. This is what I was the PD arrays that I was paying attention to. I want to see how price reacted to these during the overnight session. Today is Friday. We had two very interesting days this week. Wednesday and Thursday was very interesting. Very interesting. Now, do y'all remember last week when I said pay attention to those Monday gaps? And I said, you're welcome. Ever since Michael J. Huddleston put me on to, and I'm saying he ain't just called me up and say this. He talk about stuff in his Twitter spaces and his YouTubes. If you just sit there and listen long enough, he be dropping gems. He was talking about those Monday gaps, those first gaps from Monday. And he talked about extending them through the week and pay attention how price reacts to them. Right? And so I had started doing that. And y'all remember last week how price reacted to those Monday gaps last week, right? And a lot of times I hate saying stuff that I've learned from ICT because people start to put a lot of focus on like the latest and greatest thing that comes out of his mouth instead of understanding that like everything he teaches, it's a whole concept. It's one of the things where you don't get so fixated on event horizon. You don't get so fixated on silver bullet. You don't get so fixated on consequent encroachment. It's like, it's just a whole bunch of stuff you know. And then you be like, okay, this is something that I may need to pay attention to now, or the way prices reacted to this, I need to be looking this way. Or it's just one thing you know how like when you're a child and you're in your like my wife, for example, story time. They were, I want to say they were like playing in some perfume and stuff, right? Playing in some perfume and stuff, and they weren't supposed to be. And so they had stopped. They hadn't been playing in it in a while. But when their mom came in, she was like, "What you doing in my perfume?" And my wife, for the life of her, couldn't realize how her mom knew she had been playing in this perfume when in her mind, right, she ain't playing in it no more. She don't realize, right, because she been playing in the perfume, so she's used to the smell. She don't realize that her mom just walked in the room and smell the perfume. Ain't nobody in there but her, so her mom know that she did it, right? That's the same thing when it comes to the ICT concepts. When you walk in the room, you know the smell, so you know what's going on, right? That's how I look at the ICT concept. That's why I said I want to know it all, so that I won't be a one-trick pony and I understand when to trade off this fair value gap and when not to. You know what I'm saying? So, with that being said, with the Monday gaps, right? Remember last week how price reacted to it. And I said that because I don't want people to think, oh, I got to try to take a trade off the Monday gaps, or I got to take a trade of this right here. It's just one of the things you know, and you don't be surprised when you see where price stops. Tim, what are you saying? You ain't saying nothing, right? You see over here, I got this folder here. I don't know if you can see it. It says it says Monday gaps right there. All right, if I turn this on, those are the first gaps for Monday, right? This gap right here was the first gap in the morning, and this gap right here was the first gap in the afternoon, right? Yesterday, price came all the way back up, took out that high, and look where it stopped. Where did the body of the candle stop? Inside that very first Monday gap. Yesterday, nothing could stop price from moving. Nothing. Yes, I put something in the Discord yesterday, right? I put something in the Discord yesterday. Come here, Discord. What in the Discord is going on here? What is that? Hey, Black Spider. ICT got a short. Oh, that's throwback. I'm like, wait a minute. What is that? That's throwback. Oh, because I was searching. I was searching for shade. That's why it's way up there. Jump to present. Okay. Jump to present. God dog it. There you go. Stop it. Jerry Springer. Right here. Yesterday at 10:16. Right? I said, don't feel bad. The 10 a.m. 1 minute candle left me at 4103.50 and took off. Right? It came down to 4103.50 and took off like a rocket. Right? And then that was I posted that at 10:16. And then at 11:28, I posted, when you get left at 4103.25 twice, because I was sitting at 4103.25 trying to get picked up. It came to 4103.50, took off like a rocket, and then it came back. Now, let me show you what it did again, right? And then that's me being nervous. That's me dancing nervous because I said the overnight swing's looking good. I'm still a little nervous because I'm still 100% on the option side. So far, that's supposed to be so far this year. So far this year, and that's me celebrating, but I'm nervous and dance. But anyway, now, what was I talking about? Let's go over here to yesterday, Thursday, right? All right. 10 a.m. right there, right there. No, 10 a.m. right here. This 10 a.m. candle right here. Is that 10 a.m.? Yeah. Let's go down to the 1 minute. Squanch it up a little bit. It's PM. God dog it. PM. AM. Here you go, right here. So, yep, that's it. Because I remember the shape right there. I was thinking about Megamind, the big M right there. I was thinking about Megamind when it was here. So, right there, that 10 o'clock candle right there. That 10 o'clock candle right there. That's 10 o'clock candle. That candle came down to 103.75 right there. Where was I trying to get? I was trying to get picked up over here somewhere. Right there. These candles here. I might have been looking at the MES. Let me see if I was looking at the MES because the numbers ain't making sense to me. The numbers ain't making sense to me right there. Because I remember here. But anyway, right, that's 10 o'clock right here. Because I remember it came down there. Right here. Didn't pick me up. It looked a little different on here because on the MES, they be like the ticks be a little off. And so this candle right here. Right there. Yep. So this is the candle. It was the MES because this is the 10:01 candle. So that'll be the 10 o'clock candle. No, 1 at the beginning, that's 10:02. 59 candle. Right here. That'll be the 10 o'clock candle right there. Yes. 4105.50 right there. That candle right there. Yeah, now there you go. That candle right there. That one there. Didn't pick me up. The wick's a little bit different on here, but then it came back down again because I was looking at the MES. Then it came back down again over here, right there, a little bit higher than that one, and didn't pick me up again. And both times here it went up, and here it went up. Both times it took off without me, left me, right? Oh no, I'm looking at it wrong. It's supposed to be 4103. It's 41. Right there. Right there. Okay. I was looking at 5-minute candles. This right here. This makes sense here. Now it makes sense. I'm like, why was I trying to get in there? Right there. And I was looking at the MES. So this fair value gap right there, the wicks are a little bit different on here. So that area there where I was trying to get picked up, took off, came back down again, but it didn't get all the way back down, took off without me. Yeah, there you go. All right. So now I'm tracking now. I'm tracking now. Look at the 5-minute. Y'all know I had to get that right. Y'all know I had to get that right. Y'all know I had to get that right. There you go. Y'all know I had to get there. It is right there. Now that's making sense. Y'all know I had to get that right. Right there. There it is. Because I'm like, wait a minute. Don't none of that make any sense. There it is right there. There it is right there. There it is right there. Breaker, fair value gap. There it is right there. All right. Institutional order flow entry drill had it one tick inside of the fair value gap. Right on the MES is a one tick off. Had it one tick inside the fair value gap. This candle came down, stopped at the high of the fair value gap, took off. Right. This candle came back down close to the fair value gap, took off right now. Had to figure that out. That was going to drive me crazy if I didn't figure that out. Now, what was I talking about before I started saying all that? Oh, yeah. Nothing could stop price yesterday. Nothing at all could stop price from going up. All price did was go up. Oh, the market open, market open, market open. If you're going to trade, please trade safe. Not going to trade, please take copious notes so you can go back and study what you traded. Right? I said all that to say nothing could stop price from going up yesterday. Right? Nothing at all. Now, what was just sucking price like that? right? That's what I was saying. This is when having the knowledge of things comes into play, right? When we started out the day yesterday, the chart looked like this, right? And if you don't have those Monday gaps on there, you don't know, hey, what's just sucking price up here like that, right? So not only do you have Monday gaps there, look at all, and this is why I say you don't get so focused on one thing. Guess what else you got right there? See this thing here called new week opening gaps? If I turn that on, right, and turn the Monday gaps off, there's a new week opening gap up there too, right? There's a new week opening gap up there. But once we got, where did it stop? Right? Where did it stop? After taking out the buy side, price came back and rested inside that Monday gap. And now, mind you, now it took out the buy side after the market closed. The market just calmly put all the way up to the Monday gap right there and closed. It even pushed through 1, 2, 3, 4, 5 new week opening gaps and stopped at that first Monday gap. Stop right there. That last hour just chilled out and bounced in between the Monday gap and the new week opening gap. Right? Right. Once we got above it, it just used that new week opening gap as support and just sat there. And then after hours, it used the little earnings news to pop up there, take out that buy side liquidity, and then calmly suck back down into that Monday gap. Right? Into that Monday gap. This is all, it's all stuff if you filled in a weekly PDRA, right? There you go. There's some other stuff you can be looking at, but this is all the stuff where if you have the tools in your toolbox, you're not surprised when the market does things, right? You're not holding on to a trade longer than you should because you know, hey, I might need to get out here. Hey, I might need to get out at that high. Hey, I may need to get out here. You know what I'm saying? This is like all stuff. So when I share my charts, like I say, we're in the phase where we're sprinting now. We're in the phase where we're sprinting now, where I may not spoon feed every inner underlying thought in my head when I share my chart with you, right? But it's like I'm sharing my thoughts like, hey, these are the PD arrays that's of interest to me at this point in time. Why are these the PD arrays that's of interest to me? Because we have this new week opening gap here, right? That's the new week opening gap from this week, right? The 23rd. That's this week's new week opening gap. Left that on there, right? That's the new day opening gap from last night, right? This is a bullish breaker, right? At the top of this run right here, right? This is a bullish breaker at the top of this run right here. So I'm watching this breaker, right? I'm watching this breaker to see if this breaker is going to keep price up to attack this buy side that we rejected off after we ran this buy side. We got a strong rejection. So I want to see if this bullish breaker is going to support price to attack that buy side, right? I'm watching this new day opening gap to see if overnight we come up and try to fill it and then drop down to this breaker, or if we're going to wait and then attack that breaker and then push back up to attack that, right? I'm looking at that. Now, the reason why I'm looking at this area down here, this is the fair value gap that's in the discount. I fixed this last night and it was working, but now for some reason it keeps going back to that fair value gap is at equilibrium. That breaker is in the discount, right? This is a new day opening gap from Tuesday, right? So I got a new day opening gap right there at a bullish breaker. That's the first breaker in the discount. And this is the imbalance that's at equilibrium, right? So that's why that stuff is on my chart. And then in the midst of all of that, now we're inside of we have two new week opening gaps. If you look at this dark purple part, we're resting right there on the smaller new week opening gap. We came down to the wick down below the breaker a little bit into this BISI, right? But respect the body of the breaker, right? And then we're inside this new week opening gap. And now we came from this new week opening gap down to this new week opening gap inside the breaker. And now we've pushed back up to that new week opening gap, right? That's at the bottom of the new day opening gap. So it's like prices have been ping-ponging in between those, right? And what do you do with this information? Some people might feel like it's useless. Some people might feel like it's the best thing in the world to ever have. But the way I look at it is, now I got reasons why price is moving. I got educated, well-vetted, back-tested, and reliable reasons why price is stopping and turning around here, right? Why price is stopping and turning around here. You know what I'm saying? It's not like a random, hey, why did it do that? It came down to a breaker that happened to be in line with a new week opening gap, right? The algo is leaving this stuff here for a reason. Why did it leave that breaker there? That breaker is there for a purpose. How did it know to leave that breaker there? Because it left a clue there before with a new week opening gap. It had a new, so it remembers that area. Hey, I remember this area. That's a new week opening gap. Let me leave a breaker there to remind myself that when I come back there, I need to do something else. You see what I'm saying? That's how that confluence work, man. That's how that confluence work. Question. Thanks. That answered my question. Okay. I was about to read it, but okay. Because we previously went back to the new week opening gap and the new week opening gap. Are we done with them? ICT keeps them up. Now, I keep them there. Like you said, that answered your question. I keep them there as long as price is in that area. I put them there to see. I'll keep them there and move them. Long as price is approaching that area, I look to see if there's a new week opening gap in that area. And then I go back and I look to see if the algo is laying some kind of confluence on that area. You know what I'm saying? If it's laying some kind of confluence on that area, then I really be paying attention to it. I really start paying attention to it. If it's like, you know what I'm saying? Like, that's why I marked out that breaker at the top of this. Look how high up this breaker is. You know what I'm saying? This is a bullish breaker at the top of this, at the top of this run. Crazy. That's crazy high, right? Now, mind you, you can say, okay, let's go to this point right here, right? Let's go to this point right here. Now it's in the discount, right? Now it's in the discount. But in the overall scheme, it's in the premium. But when you talk about where price left this balanced price range, it's in the discount. And that still goes back to how the algo lays confluence. Because if you look at the overall day, right, all of this is in the discount. If you look at overall move, that's at equilibrium. You see what I'm saying? So from the day, all of this is in the discount. So on a daily level, you will want price to come back to here to buy, right? And if you're looking at just not our own calendar wise, just looking at price action wise, this balanced price range, you don't expect price to come back here. Now this breaker, right? Now that breaker is right at equilibrium, and price came down and dipped into a slight discount into this fair value gap, and now it's pushing back up, right? But It's all the confluence is laid with new week opening gaps aligned with a breaker, right? We got a new week opening gap aligned with a breaker. You see what I'm saying? It's like stacking, that confluence be stacking. That, and I don't know if it's true, but that's why I believe Michael be like, we're not supplying demand. We cut through candles, right? Because the algo refers back to this stuff. It refers back to this stuff and it remembers that stuff is there. He created the look back, right? He created the look back for you know what I'm saying, the purpose of looking at, hey, 60, 90, like 20, 40, 60 days, right? The look back for 20, 40, 60 days, right? This right here. So the look back, where it look back 20, 40, and 60 days, and then look forward 20, 40, and 60 days. But you know what I'm saying? That's like how far back the algo looks. You know what I'm saying? But if you're coming down to an area that it's old, computers ain't gonna forget stuff. You know what I'm saying? It remembered all that data still be in there. You know how people talk about, you know what I'm saying? Once you put it on the internet, it's there. You can't get it back off. Somebody can find it when you put it in a computer, right? So it looks back. It's set to look back so far. But what happens when it looks back and it ain't nothing in its criteria when it look back this far? It just keep looking back. It keep looking back and be like, just say it's looking for new week opening gaps right now. And it look back to here and there's no new week opening gap in the range. Then what is it going to do? Just keep going back until it find a new week opening gap. You know what I'm saying? Put my new week opening gaps on there. Let's move the IPTA. Put the IPTA right over here on yesterday, right? Put IPTA right over there on yesterday. And let's blow this up, right? All these new week opening gaps right here, right there, that we're pushing through, right there. All of them that we're pushing through. These right here, all the way to this one right here is outside that range. This one right here, almost outside that range, right? And then this one right here that we came down and respected. Look at that right there. At that 40-day look back range. Right there. When we came down, stopped at a new week opening gap right there at that 40 look back range right there. We had already gone through it one time, but then we came back. That was our first time coming back to it right there. That was our first time coming back to that new week opening gap that we came down to, respected that new week opening gap, opened up the next day. Then we took off and came all the way back up right to that Monday gap, right around this new week opening gap here. But we came back up to that Monday gap right there. And on the way, there was a lot of attention being paid to these older new week opening gaps. Like this one that's outside of that range. This one right here that's almost outside of the range, right? These up here, there was a lot of attention being paid to those new week opening gaps. Because when I mark my stuff there, boop, when I mark my stuff there, right? Remember, we had a breaker on this one here. We had a breaker. Let's go back up to the daily candles. So if I can see. Right. This one here, go way back. We got a breaker right around there. It's a breaker here somewhere. One of these is a breaker. That's fair value gap. That's a breaker. There's a breaker there. That's aligning with this one here outside of the 60, right? That's a breaker there. That's aligning with this one that's almost outside of the 60. You know what I'm saying? It's leaving little reference points for all of this old information, but the one that it came to and stopped was the one right there after we pushed through it. That was our first time coming back to it, right? And then if you notice, I got, I still got a bunch of them down here because if price was to keep slipping down there, I want to see how it's going to react to those. I did that already. I can't remember which video it was in, but we did that already. The breakdown. I might revisit it one day in the future, but I can't remember which video it was in. I ain't even gonna hold you. So we'll probably revisit it in the future. Oh, we going crazy right now on the Dow. Look at the Dow coming to attack these highs. Now, peek this right here. It's Friday, so be careful with this. Be careful with this right here. Whenever I see this right here, you see everybody know what this is over here. Everybody know this is my divergence chart, right? Let me blow this up a little bit so y'all can see, right? What do y'all see right here? Right? The ES made a higher high, the NQ made a higher high, and the Dow made a lower high, right? That's divergence, right? So how do I use that? Right? Now, this is showing bearish divergence. So how do I use this? The way I use this is, right, I look at this high that the Dow did not take, right? And I look at what the ES and the NQ did. So now I'm looking to see, when is the Dow going to come attack this high? It's doing it right now. So when the Dow comes and attacks this high, right, what I want to see is rejection. I want to see the Dow reject off of this high, and I want to see the ES and the NQ come up and either reject, like the NQ, like this farthest away. I want the NQ to reject this consequent encroachment, right? I want the NQ to reject this consequent encroachment of this wick, right? I want to see the NQ reject the consequent encroachment of that wick. It'd be nice if the ES rejected the consequent encroachment of this wick, right? It would be nice if it did, right? I'll put the same color. It would be nice. So when this runs the buy side that it failed to run over here when they attacked it, so this run the buy side, reject. This right here can even come back up to that consequent encroachment. I care less, long as it don't retake that buy side. This can come up to that consequent encroachment. I can care less, long as it don't retake that buy side. And then all of them start, and then the Dow rejects, and it starts to give a reason to trade back down. That's how I use the bearish divergence. Whichever one is the lagger, right? I want to see that one attack the buy side or sell side. The other two, move with it, but don't retake the buy side or sell side, and then give me a setup to go down and attack, in this case, the sell side below. That's how I use the divergence. Man, it's crazy. That it is. I be talking about stuff in the lives, and so it's crazy. I ain't even gonna hold you. I don't even know where to guide you to go look for that. ICT talked about it. Cliff Note version, right? If the look back, right? You got the vertical line, that's your anchor line. That's where you're starting, right? He tends to tell you to start at the beginning of the month, right? He tells you to start at the beginning of the month, but you can do it at any time. But when I think he taught it on one of the videos, right? But I think he leads you to do it at the beginning of the month. And so the next time we trade is going to be the beginning of the month, right? So let's put it here. This perfect time to talk about it, right? So this is May the 1st, right? So what you want to do, starting at the beginning of the month, this is how you can get it set up. This is how you get it set up. So you have looking back a 20-day line, a 40-day line, and a 60-day line, right? And then projecting forward a 20-day line, 40-day line, 60-day line, right? And once you put your anchor on the beginning of the month, what you do, you take your 60-day line, right? You take your 60-day line and you find the lowest low or highest high during that time frame. You know what I'm saying? During the 60-day look back, you find the lowest low or the highest high, depending on, you know what I'm saying, if prices bullish or bearish, right? Or you could just pick out both, right? So right now, price is moving bullishly. So we gonna look, you know what I'm saying? We're gonna look bullish, right? Because price is moving bullishly. So we're gonna look bullish. So for the highest high within the 60 days is this one here, right? That's the highest high. You can, since those are so close, you may want to just go to that one and say that one, but that's the highest high right there within the 60-day look back, right? And then same thing with the 20 and the 40, right? So on the 20-day, this 20-day look weird. I moved something. A 20-day don't look like 20 days. I thought them lines weren't the same length. I'm like, wait a minute, them lines ain't the same length. What's that? First, hold on, them lines, it's something wacky about that. I got to get this right. Y'all bear with me real quick. All right, that's, oh, God, dog it, Tim. Gotta make sure my line 20 days. Okay. I gotta make sure my line 20 days. My line ain't even 20 days no more. Something got all off. Okay, that's 20. All right. So that's 20. All my days. I done messed all my lines all up. Everything was like shifted over. Like, you know what? I probably moved my from moving it around. I probably messed something up moving it around. I probably should have just used info lines from the beginning. I probably should just use info lines from the beginning. Yeah, because everything was shifted to the side. All right. Okay. So 60. That's close enough for government work. We're going to go there, right, for that high. Did I not just do that? What in the hell? Okay. All right, so we should be good now. So need to keep that open. So what's this? My 40. All right, so for the 40, all right, that's within the 20. So, and I don't have any highs within the 40. So yeah. We don't have any highs within the 40 that we haven't gotten to yet. So I'm just going to take this down here and put this at this low right there, because I'm going to use this high right here to mark out the 20. Right. I'm going to use that high to mark out the 20. So that's the closest high within the 20 days, right? This low is within 20 days, but I just put the 40-day line on there because we don't have a high to attack. We don't have a high or low to attack, because the closest low on the 40-day is way down here, right? And we got a low before that to attack. So the theory is attacking this high before attacking that low. It's a bullish theory, right? So for the IP to look back, what you do, you have your 20-day look back, your 40-day look back, and your 60-day look back, starting from your anchor point, right? Depending on your bias, and you just, once you mark out the highs and lows within that time frame, right? You mark out the highs and lows within that time frame. Now you start to build the bridge for, like, you start looking for PD arrays, right, to build the bridge for the look forward, right? So now you marked out what you what we can possibly be attacking looking back, right? And so now we got this high here, at 41.98 even, right? We got the high at 41.98 even. We got that high right over here at 42.45 even, right? And then we got a low marked out over here at 40.6875. Right. I be needing mine to be exact. You ain't got to be as anal about this as me, because this is just like quick reference, but I just be needing it to be right there, right? We lock that so I can't move it. Okay, now that we got the highs and lows that we anticipate can be draws on liquidity, or we anticipate can be attacked, right? Now what you do, you go inside the ranges and start and build your bridge for going forward, right? And what I mean by that, right? So this is the closest high. This is closest buy side within 20 days, right? Looking inside 20 days, what PD arrays do we have in there? We're working on a daily fair value gap right now. I say working on because this day ain't finished yet. You typically do this after the market closed, so everything already be done. We're just going to pretend like the market is closed, and this is a daily fair value gap now, right? So we got a daily bullish fair value gap there, right? We already got the lows set with the IPs, but you can mark out sell side, right? Sell side liquidity there, right? You start building your bridge for where you going. You have buy side liquidity here, right there, right? And now, so you got buy side liquidity there. Before this one, you got sell side liquidity here. You got a bullish fair value gap there, right? So if then you start to build your bridge. You start to build out. We're not going to go into all the, you just mark out your PD arrays that you see in these areas, right? You know what I'm saying? You got a fair value gap below this sell side. You got, you know what I'm saying, other stuff, everything in there, right? So you got a bearish breaker right there that we already went through, right? So we pushed, we didn't get through the entire breaker, but we went through it's a super long wick. So I'm not really paying attention to the wick, but we already pushed through that bearish breaker. So now that we pushed through that bearish breaker, we're expecting that to be support now, right? So you got a bearish breaker that's supposed to act as support right here with a fair value gap that's supposed to act as support. So, you know what I'm saying? You get the story. So now that you done pointed out all of this right here and your draw is there and there, now you're building your bridge to say, okay, if price, now that I've got my up to look back and looking forward, right? So within the next 20 days, right, I would like to see it's bullish. So within the next 20 days, I would like to see price attack this high, right? And maybe even attack that high, right? Because I'm bullish. So within the next 20 days, I would like to see price come up, attack this buy side here, right? Right? Don't like get a hard rejection, right? And then come down, feel this imbalance, stop at this order block, because we have an order block here. Like I say, we're not marking out all the PD arrays, but there's a daily order block here. Stop at that order block, then push up, right? And attack that buy side that we pointed out within the next 20 days, right? Within the next 20 days, attack that buy side, right? And then you're going to continue, you can continually move your IP to look back forward each day, right? You can continue to move it forward each day, right? But now that we've gotten that, now that we've attacked that buy side, right? Don't get a strong rejection, right? To keep the draw moving up. If we get a strong rejection, let's just say we came down, filled that out, came here, right? Got back above this new buy side that we made right there, right? Pulled back down into an imbalance that we left right there, right? Pulled into an imbalance that we left right here, or some kind of PD array, right? And then we went up and we hit, and then when we hit this buy side there, right? We got a strong rejection there, right? Now that we got a strong rejection here, now the draw on liquidity for the short term would be right there. Now your draw would be right there because we got a strong rejection off of this buy side when we took it out, right? So then now the draw is there. We come back down and we hit that sell side because that was the draw. And then we get a strong rejection off of there. Now that brings your draw back up here, right? And then we can come up and finally attack that buy side up there. That's just for the bullish scenario, but that's how you use the IP to look back. You put your anchor at your starting point, and it just so happened where like we at the beginning of the month. Like I like to use the IP to look back at the beginning of the month when I, you know what I'm saying, when I do, you know what I'm saying, think about using it. I like to use that at the beginning of the month to like help me plan for what I want to start looking at during that month. But you can use it once a week, every day. You can use it however you want. You can use it, you know what I'm saying? You can use it once a week. You can scoot it forward every day. But it's like it's best. I find it best used like at the beginning of April, because that's the start of the quarter. At the beginning of January, you know what I'm saying? I find it best used for starting the quarter to help you plan what you want to do with the quarter. That's how he taught it. That's how he showed it, using it for starting the quarter. Here we go. We just hit the consequent encroachment on the ES. The Dow still pushing. The NQ super heavy. It's at 1006. And we're going to look like we're going to attack that buy side, right? So the ES is going to take out the buy side, look like it's going to take out the buy side along with the Dow, but the NQ is super heavy, right? The NQ is nowhere, the leader before is nowhere near the consequent encroachment, right? Like I say, it would be good for the ES not to respect that consequent encroachment, but I'm not demanding it. You know what I'm saying? I'm not demanding it, but I really don't want the NQ to get above that consequent encroachment. But now what I'm looking for here is like a heavy rejection off of this buy side and off of this buy after taking out this buy side. I would like to see a heavy rejection off of that and maybe look for a short setup. But I know I kind of ran through that up to look back. Hopefully it made sense. You know what I'm saying? Hopefully it made sense, but like I say, it's best served at the beginning of the quarter to help get you ready for the quarter, but you can still use it like on a weekly and daily basis. Yes. Consumer sentiment at 10. Okay, yeah, came in at 10. 6.2, same as estimate. Okay, so that's one of the things where like we was talking like the other day, I think the GDP was like less than expected, right? You know what I'm saying? So it's like it's showing slowed growth, right? But we're at a time where the Fed kind of want to slow the economy down. So it ain't necessarily good that the growth is slowing, but it is good that the growth is slowing because the Fed want the growth to slow down, right? They want it to slow down. They just don't want it to slow down too fast. You know what I'm saying? So the Fed getting what they want. The Fed getting what they want. And like shout out my financial advisor Dustin. He put me onto this a long time ago. Like he was talking like people like, hey, you know what I'm saying? I thought like tech companies don't thrive in high interest rates environment. He put me onto this long time ago, and he said all the time. It's not that tech and growth companies can't thrive in high interest rate environments. They can't thrive in unknown interest rate environments, right? Once they know what the Fed gonna do, now they know how much it's going to cost them to borrow the money, right? If they don't know if the Fed going to raise 0.5, 0.2, 7.75, 1.0, if they don't know what the Fed going to do, that's uncertainty. So they don't know how much it's going to cost them to borrow money. But once they know how much it's going to cost them to borrow money, they can go back to business as usual and start to thrive again. And right now, it's like we kind of getting to the point where everybody, you know what I'm saying, kind of judging with the Fed. So now you see the tech and growth companies starting to pick back up because it's not unknown. The future ain't unknown, right? The market just don't like uncertainty. Like that's why like I ain't a big fan of the term baked in. Everybody be like, oh, we got a 2.5 we got a 0.25 baked in, we got this baked in. I don't like the term baked in. It's just like the market don't like uncertainty. If the market when it gets a surprise, it goes crazy, like either good or bad. If it get a surprise, the market go crazy. A good surprise, it go crazy up. A bad surprise, it go crazy down. You know what I'm saying? The market just likes certainty. It just likes certainty. Man, I was going to share with y'all a video that Dustin did the other day. Ali, what was that video? He had did something, and I was like, oh yeah, that was nice. I like that. Let me see real quick if I can see what it is. Let me see real quick. I was gonna share with y'all. Jaswell live. Earn is good. Stock market. Let me see which one. Was it this one? Let me see. Let me see which one it was. Was it this one? Let me see. Yes, I think it was this one. Yeah. I'm gonna let this play. I hear some music or something. Let me go check, see what's going on. I hear something going on.
Go through that. But if you look at the news to start the day, we've got a lot of economic data, GDP numbers, the inflation inside of that there. The initial focus was on GDP, which came in a little bit weaker there. And inflation inside of it, using that PCE number, what everybody focuses on, came in at 4.9%. So that lets people believe that inflation is going to go higher. Now, remember, inflation will go higher just naturally based on the way that we calculate it. So this kind of sets an interesting thing. I'm really curious to see if the media presents inflation going higher as a bad thing, or if they're honest about it and they show the actual data. If we go over here and look at the data, this is something I shared with clients, the projection of how interest rates could go based on the, inflation could go based on the month-over-month data. Naturally, as we shave a year off, the number goes down. Shave a year off, it goes down. But now we have numbers, the higher numbers are less. So our average is actually going to be a little bit higher. So we'll see how that goes. I'm kind of fascinated to see how it goes. And of course, we'll cover it here. Remember that we are... we're trending at a rate of 0.2% month over month. So if you look at this chart here, that would be your yellow line, 0.2% month over month. At what point do we get back towards where inflation should be, presuming we stay at 0.2% month over month? At what point do we get back to a meaningful inflation rate where the Fed would be happy? Well, it's going to be at the end of June going into July. If we stay that way, if we start creeping higher, which is very likely, month over month is going to show likely 0.3% or something like that. Well, now we've got just a little bit further to go. But again, the number, inflation, just brace yourself for it. The number is going to go up. So that's okay. That's not a matter of inflation going up. It's a matter of the inflation rate now relative to 12 months ago. We're not referencing 15 months ago anymore, 16 months ago when, things were different. So that's what we've got there. Okay, back to GDP for a second. The GDP number was actually good. And I'm not playing contrarian here. It's actually good. So if you look inside the GDP number, the problem was we came in at, I think, 1.1%. That's a really slow growing economy. Yes, I get it. That is not good. We cannot survive that. However, what they don't talk about is there's a couple pieces to this. We look at the inventories and we look at consumption. So if we look at inventories, inventories were down 2.3%. Okay. It must mean we're consuming, right? Yes, we're consuming the living daylight out of this here. So inventory is minus 2.3%, consumption 3.7%, way above expectation. So in other words, the vendors, the suppliers, the retailers, they're all, if you want to sound fancy with your friends, it's called destocking, right? So they're saying we've got all this crap that we need to get rid of. Oh, everybody's still buying the daylights out of this crap? Let's do that. You go, well, what about UPS? What about, what did we look at the other day? Old Dominion, JB Hunt. We looked at JB Hunt. Okay, well, so let's go over there. Well, if all is still good, then why is UPS? Look at that. That's incredible. What's going on there? Old Dominion, Old Dominion Freight Line. There we go. Oh my God, why did it fall apart there? JB Hunt. We just talked about this yesterday. What is going on with JB Hunt's falling apart? If we're not shipping these things, then how can the consumer be doing so good? It must mean the economy is getting weaker. Turns out all of that's false, and that's why you actually see those stocks moving higher today. Now that we have the data, we know that we're still buying the daylight of all the stuff on the shelves, but we don't need to order more stuff at the moment because we have this incredible amount of inventory.
We
That's
took
all that
out
was going on
yesterday's
there.
high.
So the GDP number coming in at 1.1%. On the surface, if you just look, go to CNBC or Yahoo or whatever you look at, if you go and look at that number, you go, oh, that's not good. Hard landing, recession. This is all a problem. No, it's a recession if we have less stuff and less people are willing to buy it. We have less stuff because people are buying the living daylights out of all the stuff that's on the shelves there. So that's your breakdown of GDP numbers that you probably won't see anybody else explain. And that's kind of sad because there's often places that have different narratives and they want to create excitement and stuff. But at the end of the day, the data doesn't really lie there. You guys are spending a whole lot of money, and good for you if you have the money. But whoa, like slow down. You don't have to buy so much. It's okay. For the S&P here today, that is what's on the screen. Yes, you can see that's on the screen there. 13% of the S&P, that was it, of the stocks that were lower.
So I thought that was some interesting information about like the GDP stuff, where he was talking about like when you dig into like just listening to the GDP numbers, it may sound like it's bad or not that good, but when you really dig into it, it's actually some good there. He also went into like some other stuff that he was talking about, some companies that that they have in their portfolios that they manage themselves, how because like the stuff like for freight type companies, because the people got so much backlog, they're not ordering as much stuff, so the freight companies aren't shipping as much stuff. But because they got all of this backlog, then that's potential money for them to have to fill these orders. So that's going to help them, and that's going to help the shipping companies. So people started like, hey, that's potential over there. So people starting to invest into the companies that might have missed on earnings or not did so good on earnings, but they got all this backlog. So even if they got $1 billion in backlog and they lose half of their backlog, that's still $500 million in income that they got. So people moving to those companies and stuff like, you know what I'm saying? People just talk about doing deep dives into the actual GDP numbers and not going off of the headlines that the goofballs over here on these different platforms be saying, oh, well, market taking because of this, oh, it's skyrocketing. They don't know what they talking about. They just putting out these news headlines to like entice manipulation. We outside spending money. I was saying that we took out, blew through yesterday's high, blew through it. I just marked out a couple volume imbalances. We just filled a daily volume imbalance, and we didn't push through that already. I just put this volume imbalance and this volume imbalance on the screen. I just put, like, we were just coming to this one when I marked it on the screen, and I marked that one on the screen, and we, you know what I'm saying, we went through that one, and we almost about to hit this one. It's going crazy. I would love to see some rejection here, some rejection there and maybe give a opportunity to short back down into this imbalance here on the ES, this 60-minute BISI that we made on that. That'll be the 9 o'clock candle for trading view. This 9 o'clock BISI right here, that'll bring us back down, coming back down toward this new day opening gap, coming back down to this new week opening gap right there, coming right into this breaker. Right, we got a breaker here at this new week opening gap, at this new day opening gap, at this fair value gap right there. And it is all so far in the discount of this move right here. So I would like to see some kind of rejection here to give an opportunity to short back down to that. Right, that short back down to that. Right. And will it give that opportunity today? It then depending on how strong we close above this right here, that may be something to look at for maybe let's see what's farther to the left. That high right there. Right. That high right there. Coming back into what I was saying, right back into that to attack that high right there. If we get a strong closure above this high, look for something to come back and bounce off of this new day opening gap, new week opening gap breaker to come back up to attack that high right there. And you never know. You never know. We're in that time frame where it's all about April is a bullish month. We can have another Freaky Friday where we just melt all the way up to that buy side. And what would that do for April? Right? That would make April a positive month. Let's mark out that buy side. It's all this manipulation stuff. I'm telling you, boy. This is why it's good just to have all the information in your head so you don't be surprised by any move. You're not surprised by anything that the market does. That's that buy side. If we just, let's say we just melt up to that buy side, right? And just melt it up there all day. Nothing we can do to stop it, right? Let's go to the monthly candles, right? That puts us right at the monthly high. And that would put us at, from the close of last month, that'll put us at a 1.42% gain in April. And April is a positive month most of the time. So what better way to end the last trading day of April by just letting it melt up all day long? It could happen. We approaching this consequent encroachment right here on the NQ. I want to see what happened when the NQ get to this consequent encroachment. Will that introduce the rejection to give an opportunity to come back down? The Dow is kind of stalling a little bit right now. Has a little rejection on that wick there, stalling just a little bit. We got a little more than 30 minutes left in this hourly candle right here, and we've been going crazy. The NQ still hasn't made it to that consequent encroachment. Want to see what happens when it does. Yeah, patience is the virtue. Patience is the virtue. Patience is the virtue. Again, man, when I tell you now we've got to that second volume imbalance, man, I tell you we just came to a volume imbalance, and that's the daily volume imbalance right there. And then by the time I put the screen down, we was almost to that one. We just blew through that one. Right? We just ain't nothing can stop me. I'm all the way up. This is how it was yesterday. When I missed that entry at 10 o'clock, it was a shortage. Now they have inventory. Yes, it's like it was a shortage, right? Because of like all the supply chain issues, right? when the supply chain issues start working themselves out, right? All of the inventory start coming. Like imagine, right? You order something and your stuff is stuck on a freight line or somewhere. So you scrambling trying to get it, right? And then the stuff you scrambling to try to get and the stuff that was stuck all come in. Now you got overabundance of stuff. You know what I'm saying? So now that you got an overabundance of stuff and you weren't able to really like sell nothing because people, you know what I'm saying? Like it was, just a bunch of issues going on. But now people still buying, people still spending money, you know what I'm saying? So now they can get it off. They can get it off. And they starting to, get backlogs. It'd be crazy, man. It'd be crazy. Like, because it's like it be those little things that don't nobody. You be trying to figure out, like, hey, wait a minute, man. How was it like a shortage over here, but it's right here, and it's shortage over there? Be them little things that don't nobody talk about, man. All of that manipulation. We went above that. Went above that right there. Okay. These daily candles right here I'm looking at. So we went above that volume imbalance there, getting a little bit of rejection there. I would love to see the NQ get either just get to that consequent encroachment and fail, or start struggling right now and don't make it. If it starts struggling right now and don't make it, that'd be good. Right? That'd be good. But if it don't start struggling now and don't make it, and then it just let us melt all the way up to the top without stopping, it won't be nothing strange because we did the same thing. Clap it off for Mendez. Mendez caught his first 30-point move. I'm up here running my mouth by Ip to look back, and they ain't did nothing. Get off my screen, Mendez, with your 30-point move. Shout out Mendez on the 30-point move. Shout out Mendez on the 30-point move. It feel good, don't it, Mendez? Man, you should have seen me. You should have seen me. I ain't gonna hold you. The biggest move I ever made, and it's the only time I ever got one that big, right? I got a 75-point move on the ES. I went crazy. That was my first. I never, and the way I got it, this was back before I learned ICT. The way I got it, I just kept, it was just going, it was like melting. It was like melting down. So I just kept scooting my take profit down. I just kept scooting it down. And I was like, I'm just going to see how far it go. So if it come down, I'll scoot it down. Like I'll scoot it down 10 points, right? I'll scoot it down 10 points. And then I'll move my stop loss down, right? When it keep going toward it, I scoot it down 10 points and I move my stop loss down, right? And then finally, I just started getting scared and I just started moving them toward each other. I started breaking the stop loss down and to take profit because I was like, it's just going too far. And then I had them like 2 points apart. So it was like ticking in between, like 2 point stop loss, 2 point take profit from where the price was. And it finally popped down and boom, hit the take profit. It was like a 75-point move. I said, man, I ain't never got a move that far. Like the biggest move I've gotten here lately was like maybe like 12 points on a runner. It was like 12 points on a runner. That's the big, like lately. I ain't been trying to get like big moves. I had 12 points on a runner. That's it. But congrats, man. I know it feel good. This how I was yesterday, man. I was sitting there like, man, you got to be kidding me, man. What's the name went crazy though? That options play went crazy. But matter of fact, if I'd have still been holding it, if was a fifth, but if I'd have still been holding it, it still would have been doing something right now. It still been doing something right now. But like I say, we ain't been in no no swing trading type market. So it's like if I put a swing trade on, I'm going for 30 to 50%. If I hit it, then if I hit it, that's it, man. I'm good with that. See if we get some nice rejection here. We getting close to that. We starting to struggle. Starting to struggle with that consequent encroachment. Let's go look at that's hourly counters. Look at 15 minutes. 15 minute. The body of that counter respecting the top of that. The body of that counter respecting the top of that what's the name? See, this kind of stuff that be making me mad, right? Where this is what the price was doing yesterday. It was doing stuff like this yesterday where we would take off like this right here. See, these 15-minute counters, we just took off huge, right? And got above this buy side, right? Price would come back down, stop right at this fair value gap here, stop right there, right? And then take off again. It would not come back down and give you an entry opportunity. It'll come right there and then take off again, right? Who's buying right here? There's no sense looking at this 15-minute chart. There's no sensible reason to be buying right there. But price would just come down right there, stop at that fair value gap and take off again. Wasn't given no opportunity to try to get back in. Yep. Don't be greedy. Take profits and dip. I know you meant don't. We speak typo. I'm assuming that hard work pays off. For real, for real. You deserve it. You deserve it. Yes, you do. You're welcome. You're very welcome. Look at this funky dog. Price is still respecting this daily volume and balance. I promise you, I think we're gonna keep melting up here to this buy side. I promise you, I got a feeling it's gonna be like Freaky Friday. We just gonna melt up. We just gonna melt up. It's just gonna be a draw. It's gonna draw us to it. Right now, we're resting on that new week opening gap. All right. Remember the new week opening gap that I said we had a new week opening gap above the buy side. Right now, we're resting on that new week opening gap. Let me hide them again. See the purple disappear. Right, that purple coming in right there on that volume imbalance there, that bearish volume imbalance. It's a new week opening gap right there. So now we're resting on top of that. We're resting on top of that new week opening gap. And it's one of the things where, like, just looking at the price action, right? For me, it make no sense to try to buy right here. Right? That's too much risk. That's too much downside risk for me to just jump in right there. That's not a setup for me right there. And it's not even, you know what I'm saying? It's just not it's not a setup for me. Right? Because we rejected off here. So we traded both sides there, right? We had the gap, and we came to the top of the gap right here, and then we left right here. So this is the leaving candle, right? Now, you can make a strong argument that this is the highest high within this balanced price range right there, right? So if that's the highest high within the balanced price range, then price wouldn't want to come back lower than that. But for my personal risk tolerance, right, I have a huge BISI right here. I would need it to at least come back down inside this BISI right here, coming, like, let's just say we use this as we're leaving the what's the name? So we'll come from that low. Let me hide this other stuff. I got a lot going on the chart. I'm sorry. Come from this low right here of the candle when we left that range. Right there. Now, I needed to come down inside this BISI, get back into the discount, at least come to the equilibrium, right? At least come to the equilibrium, and that'll put us right there at that candle there. But I needed to come down in there at least. Now let's look at this on a 5-minute. That's still a lot of risk for me. That's still a lot of risk for me. On the 5-minute, we're getting rejection. We're getting rejection there off of that consequent encroachment. Is struggling to get to that consequent encroachment, right? And see, this is one of them things where this how they get you. This how they get you with the flim flam, right? So on the 5-minute, right? On the 5-minute, for me to be comfortable trying to take a short, I need to take out this low right here. For me to be comfortable trying to look for a short, I need to take out that low right there on the 5-minute. Right there. I need that short. I need that low to be taken out for me to take out a short. I mean, for me to think about a short on the 5-minute. All right. On the 1-minute, we're getting strong rejection right now. On the 1-minute, we've already got nice rejection, and we got a nice SIBI right here. We got a nice SIBI right there from the 1-minute. All right, pushed up. We broke down, dropped off of there. Now we got a nice SIBI right here. A nice SIBI right there. Nice distribution here because we came up, dropped, went back into that order block, mitigation block, and fair value gap, then dropped. So now we got a nice SIBI right there. Nice rejection right here. Dollar came up. Dollar broke down. Okay, come the same way. Five minutes still ain't break that. 5 minutes still ain't break that low. You see, this is what gets you. This is what gets you trapped a lot of times, right? When it's not giving you a clean, like on the 1-minute, I got everything I need to go short. But on this 5-minute, right, I need this low right here to be taken out for me to really, really trust it. Right, got everything I need on for the 1-minute, off the 1-minute chart to take that short. Right now. Get your breaker there. Fair value gap, distribution, right? Everything I need on the 1 minute, but on the 5 minute, it's everything you need to go long, right? And that right there is when I choose to sit on my hands. I choose to sit on my hands with that right there. And on the 5 minute, it has everything I need to go long because I'm coming back into this fair value gap at the equilibrium for going long, and the dollar still dropping. So if the dollar's dropping, the indexes should go up. Right. Right. If the dollar dropping, the index, yes, they both going down. Right. So they starting to diverge. Right. Well, that's divergence. Right. That's divergence. But if the dollar is dropping, that should give strength to these. And we're coming back to a spot that's a potential buy-in spot. This is what I'm saying. Like, it's one of the things where I can make a case for both sides, right? Because I was building out the case for the long when we first started, right? I was building out the case for the long, and I was like, I needed to get down here to be interested in a short. And then when I dropped down to the 1 minute, right? On the 1 minute, it's setting up perfectly for a short, right? We came here, you know what I'm saying? We broke this low, traded back up into that, then we dropped and we broke this low and that low, right? Disrespecting all kind of PD arrays, and then we push back, we're pushing back up into this right here. So that's a perfect short on the 1 minute, right? And the dollar is going down. So if the dollar keeps dropping, that should lend strength to this. So the dollar dropping is lending more so to the go long side. But you see what I'm saying? But with the dollar dropping at the same time as the ES, that's showing divergence. And so it's like, which way do I go? Which way do I go? If it ain't giving it to me clear, I'm cool. It's Friday. I'm cool. I'm not gonna give you my money on Friday if it ain't. It's got to be clear. You know what I'm saying? It's got to be clear. Right? Again, high resistance liquidity runs, what? Opposing PD arrays. Got a bullish fair value gap on the 5 minute, bearish fair value gap on the 1 minute. Bearish daily volume imbalances. All right. The rejection coming in nice. It's coming in nice, but let it play out. Let's let the rejection play out on the that 52 fake out. You feel me? It's that 52 fake out. Let's let it play out on the, like, let the time frames start to come up. Let's not, you know what I'm saying? Let's not try to be the first one at the party. We don't need to get top wick. We don't need to get top wick. Let's not try to get top wick. Let's let it play out a little bit. Let's let it play out a little bit, because again, my doors like yeah, I ain't gonna tell y'all how many times I was so tempted just to press buy and just let, because I was like, I know it's fun to just run up. I know it's just hit buy, Tim. Just hit buy, right? I know it's fun to run up. But I had to fall back. I had to stick to my rules. Watching this 1 minute fair value gap right here. This 1 minute BISI right here. That's what I'm watching right there. That 1 minute BISI right there. I'm watching that 1 minute BISI right there on that 1042 candle. Again, this rejection looking good right here on the NQ. This rejection looking good on the ES, right? So it's starting to play out But since we're in between spaces right now, I'm chilling. I'm chilling. I'm chilling. It start to play out, but I'm chilling. Let's look at a 15-minute. Let me move this dollar out the way. It's 15-minute. We just broke lower. Again, on a 15-minute, we just broke lower, right? On the dollar. So the dollar looking super weak. As we came up to this right here, the ES made a higher high and the dollar did not make a lower low, right? The ES made a higher high and the dollar was consolidating. The ES came down, made a lower low, and the dollar did not make a higher high, still showing divergence, right? The dollar showing a lot of weakness. So again, that weakness of the dollar should lend to strength of the indexes, right? So just be mindful of the 52 fake out. Mindful of the 52 fake out. Because again, we're even on the 15-minute. We came back into an area, a possible area of buying, right? And I said about this, but that's just too much risk for me to buy because we have not only this fair value gap there, that's that huge fair value gap on the 15-minute we were looking at. We got another fair value gap down here below this low. So there's a lot of downside risk there. And if we're using all of this right here as a balanced price range, right, we've come back to an area that's a buying opportunity. You know what I'm saying? We've come back to the area that's a buying opportunity. How far will it go? I don't know. Now that we are setting this low right here, right? Now that we're setting this low right here, I would love to see us. Let me map out what I would like to see. Right. Look at that push up right there. So we've taken out that buy side right there, right? That should be the daily high. Yes, it was. That's the daily high. So I can move this out of the way, right? We took out that daily high, pushed above it, right? Boom. All right, so we got above that daily high, these 15-minute candles there, right? So we took out the daily high, closed above it, right? Went above it one more time, right? So we took out the daily high, went above it one more time, right? I would love to see us push up here above this and get a nice rejection and then break that low on the 15-minute right now. That would look good to me. That would give me a sign of, okay, we're going to come back and get some of this before attacking that up there, right? But if it does like yesterday, it's just going to continue to melt up. Let's go look at the 5-minute. Okay, that same low right there that I was just talking about, right? Come up here, get a nice spike above that and reject off hard, then come back and take out that low right there, right? That'll give me a breaker right here. That'll give me a bearish breaker right there. If I'm come up there, take it out, reject off it hard, give me a bearish breaker, come down after breaking that low right there. And see there? Remember when I was talking about that 1 minute? Imagine if you went short on that 1 minute, you're not quite stopped out yet, but your duty hole is so tight right now. Your duty hole is so tight right now. Now, mind you, now, peep this. Look what it's doing again here, right? Just say if we get up here and take out that high, or if we get up there and we don't take out that high, but we close this 5-minute candle without coming back down to that one. Now we got a bullish fair value gap sitting right there. Right. So it's going up there, take that out, get a nice rejection, and then come down and break that low of that 1035 candle. That way we'll have a breaker there, right there, and then hopefully it'd be like a imbalance or something over here. Oh, it's almost time for me to go to the gym. Ugh. Same way I feel, no FOMO. The setup for me isn't clear yet. Exactly. It ran without me and my rules. Said, hey, look here, Sasha. Hit you with the deuces. Hit you with the deuces. Like the little on Ice Age when the little what was the possums? It was like hit you with the deuces. Yes. The FU setup. Yes, exactly. Exactly. All right, man. It's almost time for me to go to the gym. I'm gonna start, getting myself together so I can get out of here. I appreciate y'all for hanging out with me, man. Hopefully I said something today that was of use to somebody. Congratulations to SJ, somebody's mother. What was it? Somebody's mother. Yes. Congratulations. I am so happy for you. Now that thank you for sharing your story. Now that you've shared your story with me and the gang, I am overly ecstatic in my joy and happiness for you. God is so good. Won't he do it? Yes, he will. What the devil meant for bad, God meant it for the better. And now you're on your way to be the best mother that you can be and will be. And I know this with everything in me right now. You will be the best mother in the world. Well, maybe the second best, because I got the best mother in the world. I ain't gonna hold you. My mother is the best mother in the world. So you probably be the second best. If you ask my son, I don't know. But if you ask me, I'll give you second best because my mother is the best mother in the world. Hey man, I'll see y'all tonight at 6:30. Yes, 6:30 for the price action recap. Don't force nothing. If it ain't clean, don't force it. It's Friday. Ain't nothing worse than going into the weekend in the red. It makes the weekend so long. I'll see y'all tonight at 6:30 for the price action recap. Gone, man.